Hi folks, welcome to the Weekend Investing Daily Bite of 2nd of September. So a interesting day where the first half of the day was nice, markets were going along, but the second half was a complete disaster with a complete sort of bloodletting happening in the second half. But I still think there is hope that this rally that started 2 days back can sustain, and the idea is that US tariff executive orders are being challenged in the court, and the court is not accepting those executive orders. So I don't know how long it will take there, and I don't really understand the system there. That when they could be declared nullified. And our administration seems to be creating new ties and new narrative about uh, brushing off the US tariffs and not seem to be buckling under that pressure. And more countries are basically our administration is reaching out to enhance business prospects. So I think overall, while the overall sentiment remains a bit soft, the prices perhaps just may consolidate here. Disclaimer as always, if you understand it, only then proceed in this video. Do subscribe to the channel if you haven't so far, and let's look at some charts. So here you can see Nifty opened higher than yesterday, went to a decent 24,756, and then collapsed from there to 24,522. So almost a 230 point drop during the day, and it closed marginally lower than yesterday, minus 0.18%. So uptrend is not yet established at all, but as we were looking out for a 2-day high, that has also not happened yet, but it has not completely erased yesterday's gain also. So there is still some hope that perhaps the support at 24,400 is working. Nifty Junior, on the other hand, was up 0.5%. So this selling bout likely has come from some FII. Perhaps we will know later in the FII numbers. Maybe somebody has cleaned out their books today. So Nifty Junior is not really showcasing the same move as Nifty. Mid caps up, also up, although they did take a beating post afternoon, but up 0.18%. Small caps have actually closed above 2-day high, so that's a good sign, at least the first thawing sign that maybe, just maybe, we are not breaching this support anymore. 0.59% right here, and this is where Nifty Bank is where the entire action was concentrated. Nifty Bank has erased the entire gain of yesterday and is actually looking quite weak. So Nifty Bank, if it is going to again lead the rally down, then perhaps everything else will get dragged down. But this is the really the forerunner in the market, in the move down so far. Uh, Nifty Bank closing virtually at a 4 or 5 month low today. Gold has been going up. Gold touched 10,528 at 4 p.m. It was 10,400 odd per gram, and uh, basically it is showing its characteristics that whenever there is turbulence in the markets, then gold goes up. And we have also reached a very important dollar resistance point on gold, that is $3,500. In fact, it went to 3,500 and above as well, and right now it is trading at 3470 odd. So it perhaps will consolidate here before taking out 3500, because post 3500 perhaps a run to 37 3800 will be quick. So this previous resistance at 3500 is being tested right now, and that's to be seen whether we break that or not. uh, Advanced decline trends, 311 to 190. So despite the crushing move in the second half, advances still ruled at the end of the day at 311 to 190. So not so bad situation from a larger Nifty 500 perspective. What stocks moved down in the Nifty? You can see Tata Motors, Mahindra, Ultra, Semco, Dr. Reddy, Cipla. L&T, Asian Paints, Kotak Bank, HDFC and ICICI Bank, Geo Finance, Shriram Finance, all these stocks moved down. Reliance was up more than 2% at one point, but closed at 0.9%. Power stocks did well, NTPC, Power Grid, and Nestle also has done very well today. This was the situation in Nifty and Nifty Next 50. CG Power has been going up since many sessions. Dabur, a surprise move at 4% up. Godrej CP, JSW Energy, Gas Authority, IRFC, all these stocks were still doing well today. ICICI GI, Chola Finance, Lodha, Swiggy, all these stocks were a bit soft. MRF moved big at plus 6.2%. There is talk of GST reduction from 28% to 5% on tires, and that is going to give a great fillip to many tire manufacturing companies. MRF is one of them, and it has perhaps posted a new high today at 1,53,000 on this expectation. Sectoral trends: CPSE 1.27%, public sector enterprise 1.16%, FMCG 1.12%, energy, media, defense also nearly 1%. So decent gains here. Significant or minor losses, you can say, Nifty Bank, financial services, and private bank. So all concentrated in the banking space, the losses for the day. Otherwise, the markets were looking reasonably all right. Cochin Shipyard, Power Grid, NTPC, NBCC, NHPC, all central PSCs running fast today. You can see versus other sectoral graphs, this has really picked up well last 3 days, plus 1.27% on CPSCs. And FMCG also doing well. FMCG is closing near 3-month high on back of Dabur, United Breweries, Colgate, Imami, Nestle, etc. Tweets of the day. India travel to US drops 8% in June. So this is remarkable change that is happening where since 2001 there has never been a drop in US travel. So that's actually a sign of things to come. There is another statistics which is saying that the US enrollment of Indian students has dramatically come down, like by about 40%, if I'm not mistaken. So these are really clear signs that things are not well between these two countries, and trends are changing in a very big manner between them. Uh, Another one was the fact that gold, the foreign central banks holding gold have actually exceeded the holding of their US Treasury. This is actually very big news. That in first time in 30 years, the US Treasury holding of foreign banks, foreign central banks, is less than what they're holding in gold now, and that ratio or that percentage continues to change. So, I mean, this is very telling of the situation where central banking is going, and all foreign central banks, most of, I should not say all, most financial foreign central banks are gradually reducing their treasury holdings and buying gold. And we should be doing the same actually. If we are holding on to debt for too long, we should be increasing our allocation to gold on this. US equity, an ignored gold mine or a trap? We will have this discussion at 8 p.m. today. Do tune in once again to that video. A lot of analysis is available on that video. If you like this video, do like and share this. If you liked our channel, do subscribe to our channel, do send us feedback, and I'll see you in the next one. Bye.